Morning, Steve Rain in Chicago with the morning grain comments on mixed trade overnight. Behind me is a cornfield in which is here in north central Illinois. The corn on Sunday looked really, really good. And traveling last night around the same areas, we're seeing some of the timber soils type corn beginning to curl a little bit in this heat. USDA basically said that the corn crop is rated 70% good to excellent versus 72 last week. Your best crops are in Iowa and South Dakota. Trend yields in Illinois, Indiana, and Missouri, but below trend in Minnesota, North Dakota, and Ohio. The soybeans are just kind of sitting there, looking good, but probably could use a rain. USDA estimated the crop at 68% good to excellent versus 70 last week. And again, your best crops are in the Delta and parts of Iowa and South Dakota. Lower crops as far as below trend, Illinois, Indiana, Missouri, Nebraska, North Dakota, and Ohio. They rated the winter wheat crop 30% good to excellent, down from 31. Harvest is at 25%. And so far, Kansas yields a little bit below expectations. Protein high, but test weights a little bit lower. Spring wheat was rated 59% good to excellent versus 54 last week. And on the demand side, I think the concern is about Asia with Dalian, soybean meal, and all the veg oil prices sharply lower. To date, through May, China veg oil imports are 5.2 million tons versus 9.8 last year. Most of the decline is in palm oil. Their soybean imports are around 60 million tons versus 64 last year. And their meats are almost 4 million tons versus almost 6 million tons last year. Most of the drop is in pork. U.S. Soybean exports down 11% from a year ago. Corn down 18%. Wheat's off to a slow start. Matif rapeseed is the lowest since early March. Corn on yesterday gapped open lower than 3-week lows. Matif corn and wheat's the lowest since April. And we also know that crude oil is at 4-week lows. All of this is probably due to concern about demand. Open interest yesterday down 16,000 contracts in corn, 4,000 in Chicago wheat, and 3,000 in the beans. And again, some of the weakness, we're concerned about higher inflation, higher U.S. interest rates, and maybe some margin calls with soybeans, soybean meal, soybean oil, and early on September wheat below the 100-day moving average. No real news that we've heard of why we saw such a bounce in wheat and corn from the session lows. Again, we'll be watching weather with U.S. temperatures near normal, precip below normal. The 30-day outlook for July is warm and below normal precip. There is some rains in Europe and the Black Sea, which is helping crops there and probably causing a little bit of weakness in the Matif wheat futures. So searching for demand, farmer not selling, cash basis levels domestically are very strong. We just need to see that demand. And in order for the market to rally, we need a contra-seasonal drier weather pattern across the Midwest.